Wall Street stocks recovered some ground on Wednesday after technology conglomerate Alphabet rose on a favorable antitrust ruling. But gains were muted as investors digested softer than expected labor market data and in sell-off in long-term global government bonds. Job openings, a measure of labor demand, dropped 176,000 to 7.181 million by the last day of July, the Labor Department's Bureau of Labor Statistics said.
I think what we're seeing really is the market kind of treading water ahead of hopefully a rate cut coming to us in a couple of weeks. But the impetus behind that rate cut is going to be a really important part of the discussion. Is this because we're actually winning the war against inflation? Or could the motive be a little bit more suspicious to markets in that growth is slowing? And part of that showed up today in the JOLTS report, where we actually saw a meaningful reduction in the amount of open jobs that were available for employees searching for new work. So that kind of is a signal that growth might be slowing. And the reason we get a rate cut might not be the one the market has priced in at the moment. So as we take a step back and look at what the overall impact of interest rates have been in the economy over the last year and a half, it's a really important discussion. And that's why the market reacted so violently to the upside when there was even a whiff of confirmation from Chairman Powell that rates might be going lower. And the reason is simply that the cost of capital is restrictive right now, and it's impacting a lot of different places. It is slowing growth for a lot of companies. We did see Q2 earnings for the S&P 500 up about 11%, and revenues were up about 6%. Both of those numbers were better than we expected overall from the S&P 500. The problem we have with that data right now is 80% of that is driven by 10 stocks. We all know the Magnificent Seven names. If we sprinkle in names like Palantir and Broadcom, now you're accounting for the vast majority of that growth by just 10 companies.